Taylor Riggs in for Emily Chang, and this is Bloomberg Technology. Coming up in the next hour, Bitcoin hits $1 trillion valuation as crypto tops all of the other assets. The price of the largest digital token surging to $56,000. We hear it's, well, less dumb than cash. Plus, it is a major ruling in the UK that affects Uber drivers and the gig economy. And Facebook blocking news on its platform across Australia. More on both of these decisions, which do have larger consequences. And the EV battery startup QuantumScape boasts a breakthrough in its effort to pioneer solid-state lithium batteries. We speak to the CEO. And we'll get to all of these stories in a moment, but first, we have to talk about the equity markets. We're going to do it with Ed Ludlow. Ed, it is my favorite day. We can also talk about bond yields and, well, the tech market.
Yeah, that's the story, right? Rising yields putting pressure on those high valuation big cap tech stocks. It was a little bit of a sad end to the week. The S&P 500 marginally lower, but you can see actually a lot of pressure coming from those tech stocks. The NASDAQ 100, which is a very tech-heavy index, off by 0.4%. The NYSE FANG Plus index, that basket of mega cap tech stocks, actually higher by 1.2%, but most of the names in that index down. It was actually Baidu that was up 14% on strong earnings, kind of giving it an artificial shine at the end of the week. And the Philadelphia Semiconductor Index, or SOX, that gauge of chip companies, up almost 2.5%. And it's easy with all the news flow going on to forget that we have this global shortage in semiconductors acting as a bit of a boost for the ones that are selling them. Let's dig into some of those stories and get up the next board. These are the biggest points decliners on the NASDAQ 100 today. You can see Amazon, Microsoft, Facebook, Tesla. As I said, the story, rising yields putting pressure on high valuation growth stocks. That's really the story here. These are companies that had outsized earnings growth in the most recent quarter. And it's Friday, Taylor. Let's talk about Bitcoin.
Woo!
Bitcoin hitting a total market value of $1 trillion. You can see there, in terms of price, above 55,000, Elon Musk tweeting to the Bloomberg Twitter account overnight saying all kinds of things about Bitcoin. I know you're going to dig into it in the rest of the show. One final chart that I want to get to is actually biotech. Is biotech behaving more and more like Bitcoin? Well, no, not really. The white line is biotech. The blue line is the S&P 500. You can see biotech over the last 12 months has had double the gain the S&P 500 has, nowhere near the gains we've seen in Bitcoin. But Evercore out with a note saying that the kind of volatility we're seeing in biotech, a lot of retail traders piling in, making speculative bets, is very similar to the behaviors that we see in the cryptocurrency. So maybe one to watch is the NASDAQ Biotech Index going forward. Taylor.
You know I'm in for a real wild ride in the next hour. When it was at 55,000 for Bitcoin, I blinked, it hit 56. Now we're back down to 55.4. So it's like I can't even keep up.
That's impressive that you're keeping track of that.
Blink
wow.
and you miss it. Ed, stay with us. Talk to us. I finally did my research and figured out what LiDAR is. What are LiDAR stocks? Why are they moving?
Yeah, important story. Bloomberg News breaking on Friday that Apple in talks with LiDAR makers with regards to its self-driving car project. Apple actually gaining on the news. It paired some of those gains throughout Friday's session, as did some of the LiDAR makers, Luminar and Velodyne, both gaining high single digits, but pairing some of those gains throughout the day. The idea here is that Apple is some way off from getting to a self-driving car of its own. And LiDAR, the consensus says, is a key part of the sensor suite that helps cars to see the world around them, to be truly autonomous. Bloomberg News reporting that those talks between Apple and LiDAR makers are ongoing. Apple has invested pretty heavily in its own research, its own work, R&D on its own LiDAR technology and the underlying software that powers self-driving. But it's one to watch and a sign that Apple actually may be further away from a product than we might think. Taylor.
Bloomberg's Ed Ludlow. Thank you, as always, for the good update, and happy Friday. Now, the UK Supreme Court unanimously ruled that Uber drivers are considered workers, entitling them to rights like minimum wage and holiday pay. This changes everything for the gig economy that's become more popular. Here for more insight into what that means for Uber, we're joined now by Dan Ives from Wedbush. And Dan, it was interesting, on Election Day, it seemed that Uber, at least in the U.S., took a sigh of relief, as it looked like they weren't going to have to treat their workers like workers, but gig workers instead. But then this London thing comes along. What do you make of that?
Yeah, this was a little bit of a gut punch, especially after getting through Prop 22 in California. And I think it just shows that the issues from a regulatory perspective, the worker versus contractor issue, that's not going away. And I think this UK ruling, we could see it potentially cascade, throughout Europe, especially given Uber's exposure. We think it's roughly about 3% of overall revenues in terms of the UK. I think it's a contained risk at this point, but I think it just shows that it's not necessarily time to celebrate just yet, as they're going to continue to contend with these issues over the coming months.
What is then the risk that it goes from being a contained issue to a European issue?
Yeah, I mean, that's definitely a risk. And obviously other European countries, especially France, looking at this front and center. I think Uber, is sort of one step ahead of this. I think it is something where they're going to have to work with drivers on this issue, and they might have to scale down some operations, if it does not work economically. And that's why the whole thing's a slippery slope, not just for Uber, but for the gig economy, continues to be a head-scratcher for many. And I think the UK ruling, a bit of a surprise for investors, but I think they took it with a grain of salt, given after going through the Prop 22 nightmare in California.
Why is that stock reaction so relatively muted? Are we appropriately pricing in the risk that this becomes a bigger deal?
Well, I think the biggest deal is what we saw in California, and obviously they got through that in November. And I think investors now are just getting more and more used to that. This is going to be an issue that Uber and the gig economy are going to have to contend with. I think it does view contained to Europe. And from a cost perspective, I think right now that's something that is something that's manageable. But just like you said, if this goes across Europe, then it goes from containable to something that's more worrisome. And I think that's something that is going to continue to be a bit of an overhang around Uber and the gig economy as they get through this. But no doubt, a little bit of a gut punch in terms of what we saw from the UK.
Dan, right before your segment, we were getting an update on some of the LiDAR stocks from our own Ed Ludlow. I'm rapidly brushing up on, sort of what that means really for EVs and autonomous driving. Where are you thinking about Apple and this continued push into having a car?
Yeah, I mean, right now, Apple is essentially going through an electric vehicle dating game. As they continue to talk to vendors and suppliers, we think it's a matter of when, not if, that they dive into the deep end of the pool on electric vehicles. We view Volkswagen, VW, especially given their QuantumScape relationship, as one of the top candidates, along with Hyundai and Ford, potentially NIO. And we're talking about a $5 trillion market over the next decade. Cupertino is not going to look at this from the outside looking in. I believe we see an Apple car by 2024 with a partnership likely inked and formalized by the fall of this year.
Okay, inking a deal, I want to make sure I'm understanding you right. Inking a deal by the fall of this year, but you're looking at a car around the 2024 timeline?
Yeah, it'll be about 2 years plus to actually get a car out there, but it's all about picking the right partner.
But
they
Dan,
need one that checks all the boxes.
But, I was talking to Adam Jonas over at Morgan Stanley a few weeks ago, and he continued to say, similar to you, Apple Car is tech's best kept secret. We all know it's coming. But he seemed to think that it wouldn't look like a car that we currently drive. It might not be in the driveway. Does Apple just build a car, or is this going to look and feel like something we haven't seen yet?
Yeah, I think that concept might be something we see later this decade. But at least initially, this is going to be something that's going to be within the electric vehicle swim lane. I mean, Apple right now is going after that in autonomous. And even if they could get 3 to 5% share, we're talking about something that could add $30 plus to the stock. So, of course, there's going to be out-of-box thinking given Cupertino. But I think some of those sci-fi projects maybe happen later this decade, not coming out of the gate in 2024. That's our view.
Is it then a threat to Tesla or not?
So we don't view it as a threat to Tesla just because it's a big enough ocean for more than one boat. Even though right now in the EV market, it's Tesla's world, everyone else is paying rent. We view that Apple and GM and Ford and others, this is going to be a massive opportunity. We're talking about $5 trillion over the next decade. So I think it's something that's not necessarily competitive to Tesla out of the gates, but I think it just shows we are going into a golden age of EVs, and Apple is not going to miss out on that party.
Dan, I have one final cue for you before we let you go, because it is a Friday, so we won't keep you here for the next hour. I'm going to be interviewing the QuantumScape CEO at the bottom of the hour. What would be the one question you want to ask?
I mean, a massive battery technology breakthrough this week. I think it's really better understanding the hurdles to get to mass volume over the next few years. They could change the game of battery technology in terms of everything going on at QuantumScape. What they did this week was jaw-dropping in terms of the breakthrough.
The battery, Dan, is this the lithium ion that I think we associate with Tesla into this sort of solid metal lithium? Is that the game changer?
Well, solid state, everything QuantumScape's going after, that's the holy grail for EV battery technology. And they've made strides that I think many thought never could be made. If they could scale this, it changes the games of battery technology. But just shows right now we're in an EV battery arms race going on, just given what we're seeing in technology for EVs over the next decade.
Dan Ives of Wedbush Securities, thank you as always for your time. And coming up, Facebook making unprecedented moves to block the news sharing on its Australian platform. We have the details next. This is Bloomberg. Facebook has started restricting the sharing of news on its service in Australia, defying a controversial proposed law that would require tech companies to pay publishers when their articles are posted by users. For more, I want to bring in Bloomberg's Kurt Wagner, who covers the company for us. Kurt, what does this really require in Facebook and in some part Google as well to do?
Well, it's exactly as you said, which is that if a user shares a link on Facebook to a news article, they're hoping that Facebook and Google are going to compensate publishers who, created that article, right? And the whole idea is to try and spread some of the tremendous amount of revenue that these companies make from advertising back to the news industry. It's no surprise that the news industry has been completely changed because of these different services and the ability for people to share information that way. And this is kind of an effort for some of that money to funnel back to the people who are actually creating the content. Where
are we in the fight where this is no longer an Australian issue, but a global issue?
Well, I think this is part of the reason Facebook took such a dramatic stand here, right? The fact that they literally took news out of people's feeds in Australia is that they're worried that this is the kind of thing that could spread to other countries, right? The minute they start paying Australian publishers for the work, then all of a sudden every country where Facebook operates is going to expect a similar deal. So I think that's why they're being so strict here, and I think that this is really important because it's going to set a precedent for what happens going forward.
Are global regulators listening and watching?
They are, absolutely. I think there's similar ideas being kicked around in the United States and in Canada. We know that Facebook obviously has a huge presence in Europe with all of its different products. And so I think everyone is paying close attention here because, again, whatever Facebook chooses to do and then whatever Google chooses to do, you can expect that's going to be what they're willing to do in other markets.
Kurt, Facebook, I think, or Google came to an agreement with News Corp. What are the odds that this is a temporary standoff and you can come to some sort of an agreement? Or is this permanent?
Well, you can come to agreements with the big players, right, with the News Corps, possibly with the Bloombergs of the world, right? But you're not necessarily going to be coming to those types of agreements with every single publisher that exists. At least it would be very difficult, very time-consuming, and I don't think that that's what Facebook certainly wants to get into and what it wants to set. So I think that that is a big win for News Corp, but I don't think that that's the kind of thing that we're going to see everybody get.
Kurt, can you walk me through the logic? Sharing stories on Facebook, in theory, should increase the eyeballs. If you click it, it should increase revenue for the online publisher. Is that not the case?
Well, that does make sense when you think about the fact that of people actually clicking and going and spending time on another website. But I think as you probably know, Taylor, I certainly know, when I go on Twitter or Facebook, I get a ton of my news just from reading the headlines, right? Just from skimming through,
Kurt,
watching
no,
people
you don't.
comment.
You're an investigative journalist.
Well, you would think that I would be wise enough that I need to start clicking things, but even I, the investigative journalist here, can sometimes skim the headlines. And I think that is probably where a lot of news organizations lose. They do get their stuff in front of a lot more people, but they don't necessarily get that click and that long read that leads to revenue on their own website.
Kurt Wagner, don't be clickbait for us. Final question before we let you go. March 25th, we're getting a slew of tech executives testifying. What do you want to hear?
Well, we've seen them do this a lot, right? This is not the first time that they've all showed up. I think what I would like to hear is something new, and I'm not convinced that we will, because it feels like these types of hearings always end up having the same kind of conversation around the role that these companies play. But, we have heard some ideas from Facebook and Twitter about how they want to tweak Section 230 and change the regulation around content online. So I'm hoping that maybe they flush those out a little bit more now that we've had a few of these hearings to kind of establish what the problem is, right? Everyone agrees there's an issue, but now we need to figure out what the solution is. And so I'm hoping they go a little more in depth on that than we've seen before.
And we're hoping that when that happens, you'll come back and join us. Bloomberg's Kurt Wagner, thank you. And coming up, can Blue Apron keep up the momentum of that pandemic-driven growth? That is the question as the company loses customers now for the second straight period. We are going to discuss with the CEO, Linda Kozlowski. All of that is next. This is Bloomberg. Blue Apron reporting fourth quarter revenue $115.5 million. It is a 22% year-over-year rise, but shares falling. The company saying that customers declined for a second straight period, indicating that the meal kit service might be losing just a little bit of that momentum from the pandemic. Let's discuss it now with the Blue Apron CEO, Linda Kozlowski. Linda, talk to us about your prescription to reverse the decline in customers.
Thanks so much for having me on the show. So actually what we tend to see is Q4 is seasonally normally our lowest quarter as a business. And that's fairly common in the meal kit industry, given the holiday period around Thanksgiving and Christmas. So normally customer numbers are done quarter by quarter. And so we actually guided to an expected slight drop in customers in the fourth quarter because of that seasonality. Year over year, we were actually up on customers for the period.
The good news as well is that average order revenue per customer is rising. What's driving that?
Well, and that's actually really a key part of the strategy. So we've been focusing on strengthening our customer base for quite some time now through both products and through marketing initiatives. And those products are really designed not only to create more value for every customer and drive that customer value, but also to engage them longer and make them stickier to the product and to the business. So that AOV number is really important to us. It's a record AOV number for us, and it really demonstrates that a lot of the product initiatives we were doing, including adding customization, adding multiple orders per cycle, and some of the other products that we've been launching at top speed over the end of 2020 are really, really taking hold with customers and helping to drive that long-term value creation.
And
the more AOV we have, the more we can invest in growth in the future.
Right. You mentioned that customers are sticky. How sticky? I mean, how easy is it to be elastic and go somewhere else to another competitor?
Well, so, I mean, it is a very competitive space, but we look at that as a positive thing because the more people are looking at meal kits, the more people are realizing the benefit of meal kits, the better it is for us. So we feel strongly that we have the best food in our boxes, we have the best recipes, we have the best quality of ingredients, and we really add that +1 that brings a lot of extra flavor to the table. So we think it's always a good thing when you can actually have some choice and have some variety. What we want to do is prove the value of our product to customers and create new ways that they can engage with mealtime, whether it's different times of day or special occasions, that actually keep them coming back for more of that great Blue Apron flavor.
What is the competition of restaurants reopening once we're on the other side of this pandemic?
It's interesting because I've never really considered restaurants to be a big competitor for us. We actually love to celebrate chefs in restaurants. It's why we do a lot of our chef partnerships, like Chef Eduardo Jordan, who partnered with us on our Thanksgiving box, and Amanda Freitag, who partnered with us last year. We tend to engage with the restaurant community because we consider the meals that we provide complementary to a full life of eating throughout the week. So we anticipate that people are going to go to restaurants and people are going to want restaurant quality food at home. And that's what we provide with Blue Apron.
I want to talk about some of the supply chain issues that we've been seeing, particularly with some of the facilities we know down in Texas, as we continue to see the worst of the storm passing, but it still is pretty bad down there. You talked about reopening your Arlington, Texas facility last quarter, getting through the pandemic. How, though, did the weather this week start to impact any of your supply chains?
So, from our perspective, Texas is such an important place for us because we have our Arlington facility, which we did reopen temporarily to help with demand. Our customer support teams and some of our engineering teams are also in Texas. So our first priority was figuring out, how do we make sure they're okay? How do we make sure that they're taken care of? Checking in on everyone and making sure everyone was all right. Because we knew the storm was coming, we were actually able to use the flexibility that we've been building into our operations to shift a lot of the boxes to our other facilities in New Jersey and in California to help make sure that we didn't have to move boxes on people and cancel any orders. So we were actually able to move most of our boxes in advance. That way people working in the facility could stay safe and stay off the roads. You
have such keen insight into consumer behavior and consumer habits. I'd love to hear your thoughts on, in the beginning of the pandemic a year ago, we were all cooking sweets to try to get us through the worst of it. What shifts are you seeing in consumers, and how permanent are those shifts?
Well, we're actually seeing a lot of consumers now who have gotten very comfortable in the kitchen and have said they want to continue to cook even after the pandemic is over. All the external and internal research shows that people plan to continue to cook more at home after the pandemic than they did before the pandemic. And that's a fantastic thing. But the other interesting thing is so many people have gained skills in the kitchen. Now what they're asking for is, we want to actually up those skills. We want to learn new techniques. We want to try new things.
Right.
And this is where Blue Apron really shines, because our ingredients and our techniques tend to be just that little bit extra. Yeah. And so people are engaging for that on special occasions and things like that. But yeah, they're still wanting some comfort food too. We're not quite out of the woods yet.
I have to admit, I learned how to turn on my stove this year, or I should say last year. Thank you, as always, Blue Apron CEO Linda Kozlowski. This is Bloomberg. This is Bloomberg Technology. I'm Taylor Riggs in New York, filling in for Emily Chang. She's on a well-deserved vacation. The cloud communications platform Twilio out with earnings this week. It sent its stock soaring to record highs as the report beat estimates and provided a strong outlook for the rest of the year. I'm joined now by Twilio CFO, Khozema Shipchandler. Great to have you. And I have to say, the Street is pretty happy as well. I mean, just looking across the analyst notes today, calling it their top cloud pick after the surprise quarterly profit. What do you see, in your words, as the biggest tailwind to the business?
Well, I think what we saw in Q4 and throughout all of 2020 was really broad-based strength across the entirety of the customer base. We certainly saw a pickup in certain industries that I think were heavily influenced by the pandemic, but what I think has now happened is that it's the start of a long-term secular tailwind. I'm talking about industries like education, healthcare, e-commerce, retail, financial services, even philanthropy. I think there's going to be really durable growth cases over time. And, we signed up some great wins like JP Morgan Chase or an H&R Block, companies that are really looking towards digital engagement and customer engagement as a means to driving intimacy with their consumers.
You're the CFO, so we can do some of the financials with you, which is what I love. Analyst notes are looking at really seeing a path to increase that average per customer revenue. You looking at the ability to be a price setter instead of a price taker and being able to boost some of the prices?
I think we want to offer a fair price to our customer base. We're not looking to necessarily charge in excess of that. I think we are priced fairly. I think our technology is really strong, and I think our prices are according to that. I think what we're trying to be is offer an omni-channel set of capabilities to our customer base so that they can grow their businesses using our tool set. and using our APIs and the building blocks that we offer to drive their customer engagement strategies.
Analysts are talking about, you just really scratching the surface. And you talk about this general macro tailwind, this up cycle that you're all in. But what is unique to you, to your business, that makes you stand out against what can be considered a crowded field?
Well, I mean, I'll give you a really recent example. There's a lot going on in Texas right now, right?
Mm-hmm.
And obviously our hearts go out to the citizens of that state. And through a very agile, software-based, cloud-based set of technology capabilities, we're immediately able to leverage our technologies to help the citizens of that state, to identify folks that are in need, extending it to even the vaccines, and being able to assist with vaccine distribution through communications channels, to be able to monitor and make sure that people are taking their vaccines on time, to give them alerts about what's happening going forward. And that's just the state of Texas. I mean, we're doing the same thing in California, all the way across the country over to Maine. So there's a lot that we can do that we're really uniquely positioned for that other companies just aren't.
Do you see any headwinds in the business as we start to think about a post-pandemic world? We've all benefited, and cloud has really benefited from this work from home environment. What about the transition when we reopen?
Yeah, I mean, I don't want to sound naive about it, but I think other than sort of macro trends that are dynamic at times, and obviously this has been a pretty dynamic year already, we see a lot of tailwinds in our business, frankly. I talked about some of the industries that have been impacted positively earlier. We think that those provide long-term tailwind to the business. There have been some industries as well that were negatively impacted in 2020, rideshare, hospitality, travel. We're starting to see some green shoots in those areas too. So on balance, with or without COVID, we see a lot of strength and ongoing growth in our business.
Coming out of the recession induced by the pandemic, there were some businesses, of course, we talked about that K-shaped recovery, some businesses really crushing it, other businesses really struggling. Within the universe of the companies that you're speaking to and overall IT tech spend, how are they thinking about shifting IT dollars? Are there any headwinds to the macro IT spend environment?
I think as it relates to what they spend money on with us, probably not. The reality is that our technologies are front of house technologies. They're there to assist with the consumer experience. And so what we're finding is that in fact, the opposite has happened, that the pandemic kind of induced a 6-year acceleration in the adoption of some of these technologies, which is exciting. But these are cost centers and buying centers that now have share of wallet inside of the company. So the CTO and the CIO, the CMO, they've got budget, they've got a mandate to drive digital transformation. And I think that provides ongoing strength to a business like ours.
We only have 30 seconds. $1 billion stock offering, M&A in your plans?
Look, we're going to be opportunistic about it. For us, it was important to raise some capital so that that cash balance was commensurate with our overall market capitalization. We're going to be prudent about our capital allocation strategy. And if something interesting comes along, we'll take a look, but no imminent plans.
All right, well, we tried. We're geeking out. Khozema Shipchandler, the Twilio CFO, thank you as always for your time. And QuantumScape hitting milestones in the battery development space. What this means for the EV industry and the outlook for the sector. We're talking to the founder and the CEO, Jagdeep Singh. This is Bloomberg. It is a breakthrough for batteries. QuantumScape, a producer of solid-state lithium batteries for electric vehicles, announced that it was able to produce multi-layer battery cells, which are fast charging and provide longer range for EVs. I'm with the founder and the CEO, Jagdeep Singh. Great to have you. Talk to us about the fundamental difference of that breakthrough, what that means for your business.
Yeah, hey Taylor. So, in December, we announced the first single layer solid-state batteries that the world has ever seen that actually meet some of the basic requirements of being commercially viable. So being able to run at high enough rates of power. You mentioned the 15-minute charge rate, very important to close the gap or narrow the gap between EVs and combustion engine-based vehicles. The energy density is higher, so you can get to longer range on a single charge. there's safety benefits, there's life benefits, economic benefits. So those are all demonstrated at the single layer level, which is the building block of these cells in December. And what we announced for the first time this week was a multi-layer version of those cells, as you pointed out. What that demonstrates is that we can actually scale up these cells, start to make bigger cells that can now be used in vehicles. So a very significant announcement. I mean, a lot more work to be done for sure in terms of completing the development of these multi-layer stacks, and of course starting up the production factories, which is going to require a few years, frankly. But nonetheless, a very important milestone relative to the feasibility of what we're trying to accomplish.
How important has the Volkswagen partnership been?
Oh, it's been huge. When you work on a new technology, there's a couple of key problems you have. One, of course, is can the technology itself work? So we demonstrated that with the data we presented last month. But an equally important part of it is, does anybody care? Is there a customer that is excited enough about this new technology to where they're willing to bet, their product line on the technology? So VW took a bet really early. They partnered with us, I think, back in 2012. So it's been, over 8 years now. They've invested $300+ million in the company. We've announced that we're jointly building a manufacturing joint venture to mass produce these cells. Without that level of support, I don't think that it would have been as clear that this technology has the impact that it can have here.
When can we start to see some of the mass producing commercially available?
Yeah, so this is one of the unfortunate realities of the automotive industry and even the battery industry, which involves chemistry and you need to build factories to scale up production. So even though we have the core technology that's been demonstrated and verified in the customer's own labs, it'll take us a couple of years to really complete the rest of the job and turn up factories to get into high volume production. So we're forecasting that this will actually be in production cars in the 24-25 timeframe, which sounds like a long time by ordinary standards, but it's kind of a blink of an eye in automotive years, really.
We're getting in the weeds here, but I know that you can do it, and I want you to help guide and educate me. Do you think that this multi-layer solid state, does that overtake what we currently hear about in a Tesla, for example, a lithium-ion battery? When does that happen, if at all?
Yeah, I mean, I think I don't want to get too much more in the weeds here, but lithium-ion batteries use what's called a carbon anode,
okay.
And carbon has a certain amount of energy holding capacity. In a lithium metal solid-state battery, you replace that carbon anode with what's known as a lithium metal anode, and lithium metal anodes have a much higher energy storage capacity. So a lithium metal battery that's solid-state is going to be higher energy density than conventional lithium-ion batteries based on carbon-based anodes. But even or equally important, you get the ability to charge the battery more quickly. So you can charge up from 0 to 100% in on the order of 15 or so minutes, or 0 to 80% is probably more realistic in 15 minutes. Whereas a normal battery might take you an hour, even in a supercharger. So those are some key differences. Of course, there's a safety benefit. The solid-state materials are non-combustible. The solid-state ceramic that we use as our separator, whereas in a traditional battery, the materials are flammable, and so that's a risk. So there's a number of key benefits that really are pretty compelling. And if we can get this battery into commercial production, as we're planning on doing with VW, it's something that's going to be pretty interesting in terms of its appeal to car companies and to consumers.
I was speaking a few weeks ago with Adam Jonas. He's an autos analyst over at Morgan Stanley, and he was saying a year from now, we're going to be talking about a massive battery shortage. Do you see a battery shortage? Are you working to actively solve that?
Oh, I mean, I couldn't agree more. There's with Adam. There's there's a battery shortage now. I think Tesla has gone on record as saying the biggest impediment to scaling up production for them is battery supply. Every major OEM, especially in the last year or so, has announced plans to electrify their fleet. Some of them have said that they're going to go all electric, by the mid-2020s. So these are very aggressive timelines. And you have to realize that a single car, long-range BEV with, say, 100 kilowatt-hour pack, like what the high-end Teslas have, uses the same number of batteries as on the order of 10,000 phones. So that's 4 orders of magnitude more demand than we've had from consumer electronics. And the world's battery factories just weren't set up for that kind of demand. So in a nutshell, it's absolutely the single biggest issue is production, and that's also what's really our biggest constraint is how quickly can we turn up production to meet the demand that's out there.
You know, on that final note, I wanted to ask a question. There's been a lot of focus on Texas, of course, this week, and the fact that while wanting to shift to renewable energy, it's hard because you can't store it. And then, batteries come in. Can you give us some perspective on battery usage as a way to store renewable energy when there are deep demands like we've seen this week?
Yeah, I mean, I think your point is absolutely spot on. I mean, I think batteries offer the ability to store energy, and the ability to store energy allows you to time shift energy generation versus energy consumption, right? So just because the sun is shining and the wind is blowing doesn't mean that that's when that energy is needed. In today's grid, energy is generated at the same time that it's consumed. So being able to break that connection and being able to store it so you can move that generation and demand sort of profile around is really key. Batteries in general are going to play a critical role in that transition. To be quite candid, the demand there for the grid is so high that you might need more than just batteries in some way. But it's a really important problem that the batteries are going to play a key part in solving.
Right. Jagdeep Singh, QuantumScape founder and CEO, so great to get your time. Thank you. Another big story we've been following, Bitcoin. Market value reaching $1 trillion for the first time, really helping this cryptocurrency surge that has far outstripped performance of some of the other traditional assets like, stocks and gold. The big rally, it continues. Prices at one point topping 56,000. Let's discuss it with Spencer Bogart, general partner at Blockchain Capital. Spencer, I mean, it goes from 55, I blink, it hits 56, I blink, it's down to 55. Is it really sustainable at these levels?
Look, I mean, I think we have to zoom out here and understand kind of both sides of the table here. I mean, on the one hand, on the retail side, we have a mega trend happening with Bitcoin, right? This happens across all age groups, but it's particularly pronounced within younger demographics. I mean, to put some numbers to this, we've got about 34% of Americans say they're likely to buy Bitcoin over the next 5 years. And by the way, that stat comes from back in the fall before the major price move. So before there was a lot of increased attention around this. And then, on the other side of the table here, we have the institutional story, right? So this has been something that's been materializing now for a couple of years. People have doubted it, but it's absolutely taking place today. You see this with major companies making allocations, major pension funds making allocations. And really right now, what we're seeing is the major private wealth management platforms are scrambling to find investable vehicles for their clients. Because at this point, it's a competitive imperative for them as their competitors and competition move into the space. It's no longer viable as a large private wealth management platform to say that you don't have any vehicle for crypto.
Well, Spencer, Elon Musk, of course, Tesla leading the way in that, making that investment in Bitcoin, except that he comes out and he says, well, Bitcoin is just less dumb than cash. Does that sound like a roaring endorsement to you?
It does not sound exactly like a roaring endorsement to me. And look, I think that Tesla's a bit of an outlier here. I am tremendously constructive on the institutional story, but do I think that, the vast majority of the S&P 500 companies are going to allocate part of their treasury to Bitcoin in the next couple of years? Probably not. But I don't think that changes the growth story of what's going on here. I mean, at the end of the day, Bitcoin is just an incredibly unique asset where you have exposure to both scarcity and innovation bundled together in one asset. There's really nothing else like it.
I understand that, but if the use case is just a weaker dollar, right? Negative real yields. If you're holding cash on inflation-adjusted basis, you're literally losing money. Is that it, though? I mean, is that enough to really get this institutional interest?
I don't think that it has to be a bearish dollar story. And in fact, I think a lot of Bitcoin holders are not necessarily holding Bitcoin because they're bearish on the dollar. Sure, I think there are some allocators that think of it as a hedge to what could happen in an inflationary environment. But really, I think that the story is more of a story of supply and demand here. I mean, the supply of Bitcoin is fixed. And if we zoom out and think about, okay, best estimates suggest that only 2% of the global population has any exposure to Bitcoin. So if we want to think about whether Bitcoin price is higher or lower 3 to 5 years from now, we really just need to think about whether more or less than 2% of the world's population will want exposure a few years from now. And when you look at that 2%, we double click, I mean, these are relatively diehard supporters that are very reluctant to give up their Bitcoin. On the other hand, we have 98% of the global population that has no exposure, and every passing day, week, month, and year, people are increasingly inclined and warming up to the fact that Bitcoin is real, it's here to stay, and this is an innovation that's not going away.
Spencer, I'm going to have you come. Someone gifted me $10 of Bitcoin like 5 years ago. I think it might be worth like $16 after taxes. I joke that I might be able to afford a coffee. So one of these days, I'll have to have someone figure out my password so I can unlock my Bitcoin. Spencer Bogart of Blockchain Capital, thank you as always for joining us. And coming up, once filled with fans, Levi Stadium in San Francisco has transformed into California's largest vaccination site. We are going to bring you the exclusive conversation with 49ers president Al Guido. It's next. This is Bloomberg. The San Francisco 49ers, my home team. They've turned their stadium into the state's largest vaccination site in the offseason, averaging 1,000 vaccinations a day and hoping to eventually ramp up to 15,000 a day, pending available supply. 49ers president spoke exclusively with our own Bloomberg's Ed Ludlow about that decision earlier this week.
It sounds like supply is obviously the issue, not just in our state, but in all states. And, but I'm very pleased with the ramp up. I mean, I think the Biden administration has done a fantastic job. We're averaging over close to about 1.7 million doses per day in the US. And so if you extrapolate that out over a period of time, I certainly feel good about the start of the next NFL football season, which obviously we're all shooting for, not just NFL teams, Major League Baseball, but all businesses, to be truthful. I mean, that is what we need to get back to some level of normalcy, and vaccine for us is really the only way to do so.
Beyond the vaccinations themselves, do you see any kind of more long-term changes that need to happen on game days, with regards to how the crowd, how fans enter the stadium, any modifications to stadiums that you guys think might be permanent?
It's a great question. I mean, we've been asked this question a lot around what are the permanent changes. And the truth is, I think some of the permanent changes are in the technology that we see in everyday walk of life, right? Where right now you go up and you pay with your mobile phone, right? So you're contactless. You might, the way you're served food might be different than it was before. Buffet lines might be no longer in existence. And so technology has come a long way during this pandemic. I think you'll see for the consumers, they'll see what they see in their daily lives inside the stadium. As far as social distancing, I think that really depends on how quickly we get this vaccine distributed and where we are in regards to herd immunity. Because obviously, if we're at herd immunity and we feel good about getting back to normal, well, then we don't necessarily need to be in a socially distanced environment. Do I think that will ramp up slowly? Sure, right? I do think you'll see Major League Baseball come back with fans in most markets in a socially distanced setting. Until you get to the point where you have that vaccine distribution, there are tremendous companies that we're working with right now to even be able to identify, if you think about Ticketmaster and Clear, what they've come together to provide within your mobile phone to show the venue operator that not only do you have a ticket to that event, but you've actually been vaccinated in a period of time. And so I think the combination of testing, vaccinations, and contact tracing alongside of truly good technology will pave the way forward for us to get 100% fans back in the future.
Are you able to quantify the impact the pandemic has had on the 49ers business and business operations over the last 12 months?
Well, it's tough to be in the sports business for sure. And look, I pinch myself every day. I'm very lucky to have the job I do and work in the sports world. Obviously, the NFL is in a different place maybe than some of the other, North America Big Five, so they say, because of our media contracts. But like, there's no question when you remove what we call gate receipts or attendance or fans from stadiums, it is going to be a massive hit to anybody's bottom line. There's just no doubt about that. And so for us, in California, None of the teams this past season were to operate with any amount of fans. And so now you roll forward all your season ticket holders, which we feel very grateful. We have our season ticket holders rolled over 90%, 97%. So they are showing the willingness that they want to come back. They're demanding to come back. They're asking questions about, what we're going to do to make the stadium safe when we get there. But it was a huge hit financially, no question, to the San Francisco 49ers.
49ers president speaking with our own Ed Ludlow. It is a one Fernando Lopez's birthday. My fellow Muni trader, my producer, who's the J-Lo of B-Tech, her father's birthday. Happy birthday, Fernando. That does it for this edition of Bloomberg Technology Wall Street Week. It is up next with my colleague, David Weston. It is weekly on Fridays. Happy weekend. This is Bloomberg.